Hi, welcome to Christensen Wealth Management. I'm Michael Christensen, and thank you for taking time out of your day to watch this weekly stock market update for the week ending Friday, October 12th, 2018. Before I jump into the charts and commentary, I would like to begin with the quote of the week from John Kenneth Galbraith, who is a very wise man in the world of finance. He once said, "If wrinkles must be written upon our brows, let them not be written upon the heart. The spirit should never grow old." Those are some wise words from John Kenneth Galbraith, who, by the way, wrote this excellent book, A Short History of Financial Euphoria, which is full of many excellent lessons on investor psychology and how fast people forget the lessons of the past when it comes to finance and investing. And boy, we entered the month of October with a very overvalued Dow, S&P, and Nasdaq, and the wheels just flew off the bus. And if you watched my video last week, I said, remain cautious. Things are starting to look a little problematic in my last video, and that was released like last Friday or Saturday. And this week on Wednesday and Thursday, the market just gave back over 6 months of gains. In 5 days, the Dow Jones Industrial Average went from October all the way back to the same level as it was on January 5th. So I won't say anything more about it at the moment. Let's talk about it during the chart review, and I'll begin with the Dow Jones Industrial Average. Looking at this chart of the Dow Jones Industrial Average from November 1st, 2017 until the middle of the day on October 12th, 2018, you can see that in just 1 week, the Dow Jones Industrial Average has gone all the way back to where it was on January 4th. So 1 week of trading took the Dow back 9 months. That is quite a stumble after a nice rally that we had from the spring and summer. So things are a little rocky with the Dow Jones Industrial Average at this time. As I said in last week's video, the Dow did have a double top, which I mentioned is a cautionary warning. And if you look at that January 26th high here, and you see where it lines up perfectly with these two highs right there. So the Dow tried twice, is what I said last week, and failed both times. And not only that, but if you drew a trend line from the lows of the recent rally, and I'll switch this to a candlestick chart, let's take a look at a trend line going from the low of June 28th on up here, touching the lows. You can see that that particular line was broken back on, well, it was really broken first on October 5th, broken again on the 8th, but both times it held, and then it broke it again on October 9th, held one last time, and then boom, the trapdoor just opened up and the Dow just fell right through the floor. And that is Wednesday the 10th, and then this big candle is Thursday the 11th, and as of the recording of this video on the 12th, the Dow pushed higher, got up to right here in the morning, and has since given away all of its gains for the day and is currently trading just below the closing price of Thursday. So the Dow hasn't been able to hold higher price. So caution on the Dow Jones Industrial Average. Currently, the short-term indicators obviously are crossed, and that signals a weakness confirmation. The 5-day moving average in red is below the 20-day moving average in blue. So that means cautious on the short term, weakness on the short term as well. And the intermediate term indicators are still above each other. The blue 20-day moving average is still above the purple 50-day moving average. So we still are holding on to that intermediate term strength for now. Let's take a look at the S&P 500. Looking at this chart of the S&P 500, going back to November 1st, 2017 until October 12th, you can see that in 1 week, the S&P 500 has gone all the way back to where it was on January 4th as well. So 1 week of trading, has taken the Dow back 9 months. As a wise man once said, the stock market takes the escalator on the way up and takes the elevator on the way down, and that definitely looks to be apparent on this chart. And if we look at those indicators, we'll run through those really fast. The short-term indicators, 5-day moving average in red is below the 20-day moving average in blue, indicating short-term weakness, which is obvious because of that huge drop. And the 20-day moving average in blue is still above the purple 50-day moving average for now, indicating we're still hanging on to some intermediate term strength just for the moment. So let's switch this over to a candlestick chart and see how it kind of played out over the last few weeks. And the trend line began right here on April 2nd, and it goes on up to touch these lows from May 3rd, May 4th, all of these days in here in July and the end of June, and it was able to recover from that. We touched perfectly off the low of October 15th here, not October, August 15th, and then we came down, hit it October 4th, held it, and then we broke it on October 5th, and then the dam burst and the S&P just dropped through the trapdoor right here. And that's Wednesday the 10th, Thursday the 11th, and as of the recording of this video in the middle of the day on the 12th, the S&P bounced up, almost recovering much of Thursday's losses, but has given it all away and is trading near the closing price of Thursday. So caution remains on the S&P 500. It wasn't able to show any sign of strength yet on Friday the 12th. Let's take a look at the Nasdaq 100. Here is the chart of the Nasdaq 100 from November 1st, 2017 until October 12th. And you can see that the Nasdaq also has succumbed to gravity, I guess you could say. And let's go ahead and see how far back the Nasdaq has gone in the last week. As of the recording of this, we draw a line straight over, and the Nasdaq is sitting right there. So the Nasdaq is back to where it was on January 26th, which, interestingly enough, was the high for the Dow Jones earlier this year, was the prior high, and also a high for the S&P 500 when it got there, just before the big February sell-off. So right now, the Nasdaq 100 has dropped back to January, given up about 8 months of gains, and has found a little bit of support. You see the little bounce, little uptick here on this chart. Little uptick on the 12th for the moment, which means that it appears the high of January 26th is providing a little bit of support for the Nasdaq for the moment. Let's take a look at some of the other things, starting with the short-term indicators. We've got the 5-day moving average in red below the 20-day moving average in blue, indicating short-term weakness. And the 20-day moving average in blue is now below the purple 50-day moving average, indicating intermediate term weakness as well. So definitely appears to be the weakest currently because of those indicators. And that means be extra cautious regarding the Nasdaq 100. Let's switch this over to a candlestick chart, and let's throw that trend line in there, and let's see what that looks like. So if we go back and throw in a trend line here and see what the when it really started to break, go ahead and draw that in there. You can see, if I adjust that just a little bit, there we go. So the trend line began on April 25th. We touched it a few times in here at the end of June and early July, as well as here July 31st and the first week of August, and in here the end of August, and we broke it on September 6th, rallied up, kissed that trend line one more time, failed, rallied up one more time, kissed it one last time, and made a record high on October 1st, and then just fell off the bus. Like I said before, it just gave it all away, and down, down, down it went. So when a trend line breaks, it means that the trend is typically no longer valid, and the fact that it rallied up and just touched that line one more time without any success of breaking above it was kind of could have been looked at as a warning that it's not able to get any higher, and then boom, it just fell out of bed. And this is Wednesday the 10th, and then Thursday the 11th we made a lower low, and as of Friday the 12th we made a little bit of a bounce, but have given away a lot of the bounce already. So a lot of caution should be considered with the Nasdaq 100. Here is one additional chart, the U.S. Small Cap 2000 or Russell 2000 Small Companies Index. These are about 2,000 companies that are heavily dependent on the U.S. domestic economy, and you can see that there is some serious problems in the U.S. Small Cap 2000. This particular index peaked on August 31st and hasn't looked back. It has been a train ride to the downside, or should I say an elevator ride to the downside. And in just a matter of about 6 weeks, the Russell 2000 has gone from its high of August 31st all the way back to where it was on November 28th, 2017. So about 11 months, almost 11 months, 10.5 months of setback for the Russell 2000. That is extremely concerning because those are some companies that really help the U.S. domestic economy, and they are not looking strong at all. Let's take a quick look at the Home Builders Index, and then we'll wrap up the video. In this final chart of the S&P 500 Home Builders Industry Index, this is definitely a cautionary tale for anyone who was paying attention in 2007 and 2008. We had the home builders peak on, it appears, January 22nd, 2018. And since then, the home builders have dropped 26.2%. That is extremely concerning. And in an economy that's supposed to be the best that we've ever had, according to Donald Trump, which he did say that just a few months ago, the home builders are not sharing the enthusiasm, and neither are the Russell 2000 Small Companies Index. This is a bit of a problem that the home builders appear to be in almost a free fall that began on September 12th. So very much caution here on the home builders, and that brings me to just say there are some interesting signs of weakness, and I just say please be careful with your hard-earned money and investments. There are some things that are happening right now that just do not add up to a very strong bullish scenario, at least for the month of October. So be careful on all of these indexes. Thanks again for watching. Before you go, please do me a favor and click the subscribe button on this YouTube channel, and then click the little bell next to it so you'll be notified whenever additional videos are posted. And in the top right hand corner of christensenwealth.com and in the summary description of this video, you will find links to the social media pages for Christensen Wealth Management. Please visit those links when you have time, and like or follow them while you are there. Well, have a great day and a great week. Pay attention to the markets, remain cautious, and remember, as a good friend of mine likes to say, getting back to even is not an investment strategy. So let's watch this market very carefully. Well, look forward to seeing you again in about another 7 days. Bye-bye.